Hey, welcome my fellow humble investors. This is E.T. Clark, your humble messenger. And boy, I tell you what, I decided I definitely need to do a video today because today was a red day, not only for us, but for the overall market. At the very beginning of this video, I had a quick slide in there of Warren Buffett and a famous saying that he has so far as to be fearful when everyone is greedy and be greedy when everyone is fearful. Now, after today, I know a lot of people are starting to panic about the price fall of HUMBL. I'm telling you right now, now is not the time to panic. Always remember, why did you buy? What is your whole plan when it comes to HUMBL? I know when I started out as it was a speculative play. I was just going to trade it, get in, ride it up, get out. But as I start to find out more about the company, I'm thinking, hey, this here is really a long-term play. So my reasoning for buying the stock changed. I'm now in a period of buy and hold. I want to accumulate as many shares as I possibly can at this low price. So I'm in the process of buying every time that there's a dip, I'm going to buy. All right, so whatever you do, always remember why you bought. If you bought it to trade and you're trading out of it, I get it. If you bought it and you want to sell your initial investment and let the rest of it be house money, I get that also. But for those of you that are in the process of considering this to be a long-term hold, buy and hold company, don't panic for the day. Don't even think about selling. Realistically, you should be thinking about buying. Also keep this in mind. This is normal. Regardless of whether it's an individual company, an index, a sector, or the overall market, when you have anything run up in price, you're going to have a sell-off. It's either going to correct, and a correction is 10%. You're going to have a crash, that's 20%. Or you may even have just a consolidation. It peels off and just starts to move sideways. But regardless of where it's at, this is normal. I'm going to have you guys take a look at this chart. Take about 10 seconds to take a look at this chart. And then we'll come back and we'll talk about it.
Come on now.
That's right. Go ahead and hit that like and subscribe buttons, followed by that notification button. That'll help out the channel. Thanks.
Now, this chart reminds me of an old song from back in the 80s, the early 80s. Now, guys, I'm a funketeer. I'm into funk music back in the 70s and 80s, and yes, I'm that damn old. And one of the songs was by Parliament Funkadelics. Get up on the downstroke. That's when I look at that chart, that's what I think of. Think about it. All of those things, all of the points of that chart that were circled, that basically means when that chart failed, or when that particular overall industry or the Dow failed. But if you notice what happened, you got an arrow pointing up. You see that chart from there went up every time. It went up, it corrected, went down, went up, down, up, down. But if you notice, if you look at the beginning of that chart and the end of that chart, that's an uptrend. In order to get up, you got to get down. That's what we're experiencing right now. All right? Here's another reason to stick and stay with this stock. Don't get panicked, stick and stay, buy more. All right. This is what happened at the close of business today, closing the market today. Google, and I'm looking at some of the players when it comes to this fintech sector. The fintech sector is on the move. Trust me. That is the future. Everything's going to be pretty much, when it comes to finance, is going to be digital. And here are some of the main players that's already there in the digital market. However, they haven't mastered all of the components of it. They don't have a one exclusive app or services that they can provide that covers the spectrum when it comes to personal finance. You got Google. And the reason I put Google up there because of Google Pay. Each one of these companies, they have a little small part, a piece of that pie. They don't have the whole pie. The only company that's close to having the whole pie is HUMBL. But Google finished out today pretty much flat. PayPal, 265. That's at 3%. Apple's at 124. It lost 2% today. SoFi is that one there is coming out in a spec, and the spec ticker symbol I believe is IPO, IPOE. But they're at 20. They lost 6% today. Then you got all of the other players in there, including your big banks. But the bottom line, all of them understand the one thing the future holds. They want to be the number one first to market player when it comes to being all exclusive. We've got HUMBL over here, an OTC company that even though no one is talking about it, just us retail investors, I guarantee you they got their eye on HUMBL. Guarantee you they got their eye on HUMBL. And they know that HUMBL is leaps and bounds ahead of where they want to go right now. HUMBL took a beating today. Closed at 94 cents, 17% loss. Let me tell you something. At 94 cents, it is a buying opportunity. At $1.07, it was a buying opportunity. Yesterday, I bought 1,000 shares. I think it was like $1.08, $1.07 that I bought it at. And guess what? Today, I bought 200 shares. Tomorrow, I may buy some more. If it continues to go down like this with no underlying news other than the whole market, and especially the tech sector is going down, guess what you think I'm going to do? I'm going to continue to add a little bit, until I get to the total number of positions that I'm shooting for. Right now, I'm sitting at about, 4,700 shares. Hey, my goal right now is I want to get to 10,000 before this price gets out of hand. I honestly believe that by the end of the year, it should be sitting at about $5. Hopefully, a couple of years from now, it's sitting at about $20. Now, I have nothing really to say to back that prediction or projection up. That is nothing more than a wag, a wild ass guess. But looking at everything that this company has, I believe it's an undervalued company presently. Now, why do we all invest? Yeah, we invest to make money. But realistically, we're buying today for the price tomorrow. If you feel that tomorrow's price is going to be much higher than it is today, you're going to buy it today. That's really why we invest. And keeping that in mind, why you bought, knowing that, hey, we believe that this is what's going to be the price in the future, which is less than today. Those are the reasons why we don't panic. Actually, we look at today's activity, 17% drop as a buying opportunity. Now, just to show you that I not only talk the talk, but I walk the walk, what I'm going to end up doing at the very end of this video, I'm going to show you my holdings when it comes to HUMBL. All right. You guys will check that out. But also, I'll see you guys back here on Sunday where I'm going to release another video. And this video here is really going to go into why did Brian Foote and HUMBL go the route of a reverse merger with the OTC company to come public. Check it out. I think you'll be surprised and you'll get it from my perspective. I think that my perspective makes sense. We'll see what you guys think. All right. Hey, I'll see you guys on the next video release. You take care. Talk to you later. Bye-bye.